Okay, good morning. Lots of interesting projects, I guess, to talk about with a down market, and sometimes that's the best way to go, start in the down market, and you always look good when it comes back up. Our project is Galleon Gold. It's in the famous Timmins camp. If everybody knows where that is, it's about a 2-hour air flight northwest of Toronto here. The whole camp started probably, let's go date it back to 1908, 1909 with some famous mines up there. There's been over 80 million ounces mined up in this camp. Disclaimers and all that, we can talk about that later. But the camp, tier 1 jurisdiction. Barrick has been up there, Newmont's up there right now, Pan American Silver. We've got a project in an area that's greenfields. There's never been a mine there, but our neighbors have been mining, millions of ounces of gold over the years. That'd be Pan American Silver at the Lakeshore mine on our southwest side, and then Newmont more on our northeast side. But anyway, we have strong economics on a project. We've got a database of 1.56 million ounces with over 525 core holes drilled, about 250,000 meters of core. We've got a great management team. Got a few back here. Raise your hand, Lisa, Sonia. If you have any questions on the finance side or the company building side, my team's here with me. And we have a large land position for the future here. Shares outstanding, 65 million. We've got some options, warrants, fully diluted, just under 80 million, market cap about 15 million. We jump up and down in share price like everybody else. Are we undervalued? Yeah, we're a hell of a buy. We call it Jacques Cousteauing it. We're so far underwater, we got to hire Jacques Cousteau to get us up to the surface here. Eric Sprott came in early. He helped me set the company up 3 years ago, along with Eric and Lisa and Sonia. And he put the first $3 million in, like he does, seeding companies, and he's played in most of the different equity issues we've done. Retail's 13%, CCM Capital out of Frankfurt, Germany, about 8%. Great shareholders, and then the management team's about 3%. We didn't vend anything in, so we buy in every issue that we do. So we put our money where our mouth is. Okay, this is the camp itself. If we start way over on the right side, you're heading toward Quebec on that. You get past the Hislop, Black Fox. Now my crew, the same guys that are with me, we built the Black Fox mine. We took it from the project called Glimmer. It was a little ramp job or test mine back in 2002. By 2008, we drilled off about 2.5 million ounces there. We'd permitted the project, rebuilt the stock mine and mill from 800 to 2,200 metric tons a day, and put the project in production at about 85,000 ounces of production. So we've got a template. We've got a team that's done this before. Now, we're exploration guys, but once we get to a certain point, we say, hey, we got to develop a mine. And that's where we're getting with the West Cache project. But if you get down the trend, you see the Bell Creek, you see Pamour, Hanor, you see Hollinger, McIntyre, the Dome, the Paymaster, all the mines in there. Each one of those has produced 20 to 30 million ounces within those areas. And then you come along to the West Cache and the West Mine, that was Lakeshores, that's just on our southwest boundary there. But we've got 10,000 hectares we picked up over time, and we've got 6,000 that's gone through a lease, which we can permit and put into production. And we've done the work right now to actually get it into the permit phase to do a bulk sample, and that's what we'll talk about. So what we'll do here is we'll blow it up, and you can see where the yellow area here, we picked an area roughly about 3,000 meters in length by 750 feet, or 750 meters in width. And that's where we're actually drilling right now, finished drilling, I should say. We drilled roughly about 320 or 525 core holes total for 250,000 meters within that area to put the ounces on the books. Now, this is by far not drilled off. We've got probably about another 90% of this property to drill. So it's a great property. It's the only one, say, closest to Timmins that has never been put into production. So we're not with what I call brownfields project, where you have to reclaim, rehab, and you have to deal with old history. We can only look at ourselves and say, how did we develop it? So we'll do it very carefully, and we've done all the environmental studies now to take the project underground. We've been working with the Story Group, Blue Herring, Knight Peacehold, Nordman Group, P&E Consultants. We've got a whole host of consultants that put the documents together for the permits. All the documents have been submitted with an application to the ministry. They're in their final weeks right now in review to do a bulk sample on this. And by bulk sample, I mean take it underground, drive a 4 meter by 4 meter ramp, roughly about 1,250 meters down, and then start setting up blast hole open stopes. But the first thing I'd like to say is on a PEA, A lot of people say, okay, you're going on to feasibility. Well, yeah, there's a lot of steps in there from pre-feasibility to feasibility. You never build a mine on a PEA study. You say, do I have economics? If you've got economics, take the project forward. And that's what we're going to do here. What we'll show is some economics on the PEA study done at $1,700 gold. And that gives us the guidance for what we have to do to get the bulk sample done on this project. First of all, when you build a PEA, you start with a database. First thing that gets cut and capped is your ore body. Okay, we've got a little over 3 grams. You see 3.6 on the indicated. By going underground, we should bring that up substantially as we develop stopes to show what the real grade is underground. But the 1.56 million ounces, we cut it down to 940,000 ounces for an underground project. Okay, in that, on $1,700 gold, we had 378.3 million NPV at a 5% discount. And so if you look over on the right-hand side of the picture, you'll see the initial capital, 150 million. Am I going to spend that right off the bat? No, I'm going to spend about 30 million putting the first test stopes in, and then we'll leapfrog it one step at a time. Very similar to the Mustang and the Braylorn project, what they're doing. The only difference, we don't have old workings to work with. We've got to put the new workings in. The sustaining capital, once you're in production, be 199 million. Average cash cost about 815 per ounce. All loaded is under 1,000. So like I said, you don't build a mine on that, but what you do is you look at it and you say, do I have economics under $1,000 an ounce? If you got it, take it forward and let's see where we go with this project. So the annual production, once it's in full production, we'll call it 2026, 2027. We should see that 85,000 ounces of production. Okay, why do you go down to underground? Why do you do feasibility work? Number one, you de-risk projects so you just don't stumble and fall. And you put a mine into production too early, and then you say, oops, I didn't do my test mining. I don't know what the real grade is. I don't know what the real cost is. We're going to actually flush out a lot of the answers from ground control, grades, what's the recoveries in the mill, that sort of thing. Right now, we're looking at tonnage of 86,500. You think that's almost a mine. Well, no, that's just the test stopes, 4 test stopes that we're actually going to develop from this with a gold grade of 8.13. So we've gone from an indicated grade of 3.6 grams to 8 grams. How do we do that? Well, we isolated it out, did more drilling, and said, voila, the grade is quite a bit higher than what's shown in the original PEA study. This is a snapshot looking overall on the project, the different zones. We have the east zone on the right side, the east zone extension, and then we have what's called in the green, the number 9 area, or the bulk sample area. That's a different structural trend. And I'm just flipping this up on a cross-sectional view now. You look at the main mine. The main mine on the number 9 has a definite ore chute. This is a volcanic unit, sediment hosted, very consistent. We had a lot of drill holes that were anywhere from 10 to 12 meters wide. We'll say 12 grams to 30 gram within those areas. So it's very high grade and very distinct ore chute. That's what makes mines, is these ore chutes. This is the layout plan. You'll see the infrastructure where you first come in, the road going in, what we call the box cut where the portal will be, and then the settling ponds for the water. This has all been submitted to the ministry. But as we're developing it, this one, hopefully that it comes on. Whoops, I'm sorry, how do I back up this? Back up, sorry about that, whoops. Backed it up again. No, it's not doing it. Sorry, I'm trying to get it to actually run. A little more high tech here. There we go. Okay, this is how you build the ramp. Norman did a lot of this. You see the little truck coming down the ramp. This is the first 1,250 meters coming down. As you put all the muck bays, the diamond drill station, the vent raises, that sort of thing. By the time you get done, this is about 30 million in work. And the revenue stream off of this will be probably about, we'll say 50, 52 million at today's gold price. And you see the first stope in green coming online. We'll backfill that with rock cemented fill. And then the second stope, just offset to it, we'll put that in. And then you'll see another one on top come into play here. That'll be the third stope. Each one's going to be 20,000 to 25,000 per stope. These are big blast hole open stopes, low cost mining. And then you see the fourth stope come into play here. This is just the bulk sample, okay? Once this is successful, and let's say we make a bit of cash on the end of it, We'll put it back into the mine. We'll do the second set of stopes as we go. And you can see 86,500 at 8.13 grams, 22,000 ounces of gold. That's just the test mine, okay? Just keep that in mind. That's the building blocks to pre-feasibility to feasibility study as you build a mine. So there's quite a few steps you get before you can say your mine's going to go into production. So now this is a still shot. I kind of went to it before, but you'll see the 4 stopes again, and again, we'll reiterate it's about 22,000 ounces of gold out of the 940,000 that's in the PEA study. So once I do these stopes, I'll immediately go back to the ministry and say, I'd like an expansion into a second set of stopes, then a third set of stopes. And what happens is, by the time you get through pre-feasibility to feasibility, you have almost an as-built feasibility study. You've taken the risk out of this and you put your money back into the ground. So on this, if let's say out of $53 million and your costs were 30, we're going to put 18 to 20 million back in the ground and do the second and the third set of stopes as we go. So the schedule here really shows the permitting end of it. We're winding this down probably in the next 2 to 4 weeks. The ministry will raise the checkered flag and say, post your bond. Our bond will be roughly 1.34 million. That's already been set to put into place. It's really just money put in the bank. The bank writes a letter of credit and you hand it to the ministry, and then they give you approval to stop or to start the project. And then you go on to the pre-development work. You do the declining, the ramping, the processing. Everything takes place at a custom mill. Now, when will we negotiate the custom mill agreement? There's quite a few mills in town. Newmont's one of them. Bell Creek's got one. Redstone's got one. Glencore guys have one. We haven't picked one yet. We will. Once I have a permit and I know the exact timeline, I'll sit down with them and we'll negotiate that contract for the milling. And whether they're going to pour doré or concentrate that goes to the smelter, we'll tell you. But the SGS Labs has done a lot of work for us. We can recover any way you want to look at it. If you want to float the ore into a con, you can get 97, 98% recovery. If you want to go to a doré to pour the doré, you'll get 96% recovery. But it's typical in the Timmins camp that you're going to do pretty well on recoveries. Anyway, what I can tell you is we're in a premier mining jurisdiction in the Timmins camp. We've got roughly about 1.56 million ounces of gold. Where are we going with it? I always wave my hands and say we're open on strike and dip. And there's multiple structures. There's the South Dester Porcupine that we're on. There's the North Dester Porcupine. We have holes in the North Dester that look great. We're talking 12, 15 gram gold. We've got to get to drilling that. We'll do that probably after we start the ramp system. We'll bring a drill back onto the property, and we'll start drilling the north end of it and a couple other quartz structures that have some high-grade free gold in them. So we have a lot of potential to add ounces. We've got an experienced management team that not only on the geological side, the metallurgy side, the mining side, has actually built these mines within the Timmins camp. So we're exploration is okay, but we're more so developers and mine operators. And that's really the strategy we're using right now, is take one step at a time, build the mine one step at a time. It'll take us several years to do that. And we'll go back in history again on the Black Fox project. We started in 2002. By 2008, we had the whole thing built. And we had spent $150 million when we got done building that project. And how did we do that? We did it in one of the worst times, worst economic times like you see today. We built it in about 2007, 2008. We borrowed $150 million from the Macquarie Bank and Rand Mercantile Bank to build it. And we did a very little on the equity side in the market because there wasn't a market. So we see the same thing today. Is how are we going to build this project? Well, that's a good question. We're going to work on it. There's ways to do it. And if you want to build the project, bring it to the market, you can do it. You just got to think out of the box how you're going to do it. And Chad Williams is in the back here, and he's going, yep, Dave, go, I'll help you. There are bankers, and what I'd like to do is thank them for having us here today. It's a great audience when you come here each time, and you learn something new every time you come. So with that, what I'd like to say is Galleon Gold's one hell of a buy right now. We're sitting in the cellar, so to speak, or Jacques Cousteauing it underwater. So if you want to take a hard look at us, it's galliongold.com. And if you want to send me a note, I'll always answer the note. Or if you want to give me a call, I'll answer the phone call. So with that.